everyone. Today is Tuesday, December 1st, 2020. My name is Evan. Welcome back to another midweek stock market analysis video. We're going to jump right into things here with our technicals dashboard. You can see stocks finished the day strong, all green across the board today, led by the Nasdaq 100, 1.39% to the upside. That was the leader. And you can see over the past 5 days now, the Nasdaq has caught up and really started to exceed and help kind of fuel this market over the past week or so. That's new behavior. That's new rotation. If you recall, Nasdaq was basically taking a breather, kind of sitting out for much of November. And towards the end of the month into December here, we're seeing that rotation. We'll talk more about that in just a little bit. All the major averages here, indices, are above the 1050 200 SMA. And if we scroll down and take a look at individual sectors here, you can see biotech at the top of the list, followed by communication services and technology. And on the downside, we've got energy in the red, 3.65%, well deserved after the strong move that's seen to the upside. Utilities second, and industrials third underperformer in that order, and those are the only three sectors that are in the red over the past 5 days. If we take a look at major markets, oil at the top of the list, followed by S&P 500 and natural gas. And on the downside, we've got volatility, we've got TLT, and we've got GLD, which is gold. So let's jump into the charts now. Take a look at what's going on here. This is TC2000. We've got our equity market grid open. So we've got the S&P in the top left, NASDAQ top right, Russell in the bottom left, and international stocks in the bottom right. We have price itself, the white dashed lines, and the colored dots are a custom smart trend filter, measures price and volume, determines trend and trend strength. So weekly chart here, which is the time frame we're looking at for all these markets. Not much new to add here, so I won't really waste everyone's time. We're still in uptrend, still have buy signals on all these markets. That's been the case for many, many months now, and there's no change there. If we go down to a daily chart, it's basically the same thing. Everything is in uptrends virtually across the board on multiple time frames. The S&P, NASDAQ, you can see just how far extended now we're starting to get from our smart trend filter. So we're getting a little bit frothy. We got a little bit of, maybe excitement in some of these individual stocks and markets, but that doesn't mean and that doesn't warrant a short sale in itself, or that we have to trend lower, or that we have to break down. It's basically indicative of strong markets. That's what strong markets do, is they tend to stay overbought and kind of remain overbought. And we're basically seeing that across the board. So let's drill down. Let's take a look at some price action here. See if we can get a little more color on the story here. So S&P 500, this is kind of the roadmap we've been looking at. 3580, that was the last real sort of level of interest, so to speak, that we were sort of playing around with, paying attention to. This was the September highs back here for the market. So those were the prior all-time highs. That was where we saw this gap or this open basically occur back here on the 9th. And then we, based underneath it, we sprungboard higher over it right before Thanksgiving. And that's basically, kind of brings us to where we are now in this move. This was the breakout session here back 11/24, which was only 5 trading sessions ago. And you can see we've basically held 3580. And with today's kind of gap up and push to new highs, we have now broken to new all-time closing highs. We've exceeded the highs here back on the 9th, and so now we have an S&P 500 which is resolving to the upside. It's closing at all-time highs. Trends are all higher here, so life looks pretty good for the bull case. I think 3580, that's still my kind of relevant zone that I'd be paying attention to. You could sort of, draw with sort of a thick crayon here. 3590, right under this 3600 area, is basically where you'd kind of like to see this market hold now. That can be a level to manage risk against. So long as we're holding above there, then, the bulls kind of have the benefit of the doubt in their back pocket. So the S&P 500 looks pretty good technically there. If we go to the IWM, you can see that we're starting to slow down just a little bit here. I mean, it's still an incredibly strong chart. Again, that we looked at the trends at the beginning of this video. Everything is still pointing up and to the right. But notice here, we did finally start to break the slope at which we've been rising here in the Russell 2000. So that was yesterday where we had a down 1.82% day. We did manage to get back some gains here today on Tuesday, but still kind of closed a little bit weaker and, you know, a little bit lackluster, I guess is the right word. And, you know, this type of behavior, this is sort of what we talked about last week in our update. You know, we essentially said that a very constructive case basically from here on out would just be the Russell taking a breather. And even if it's a consolidation through time, chop around for a few days to a couple of weeks, that would be perfectly healthy. That would be very healthy, in fact, if that occurs up here after such a strong move to the upside. So it looks like we're in the early stages of that. We did break this slope here, and we're kind of just chopping around, moving sideways. We do have our other levels below us we can start to measure and map against. We have about 179 there, 175. Those are some, you know, prior relevant levels we can take a look at if price continues to pull back. But we'll take it one day at a time right now. It seems like the Russell is doing a little bit of resting here after a very strong move. Now, the Qs are kind of on the opposite end here, because the Qs are basically you know, sort of expelling energy right now. They were consolidating for quite some time, and now you're seeing the exact opposite happen. You're seeing expansion, and in this case, it's happening to the upside. We got new all-time closing highs for the Nasdaq 100. We finally took out the highs here from early September, closed above them, and you know, life looks good once again. All is restored. The Nasdaq 100 is leading. It's moving higher. It's what basically has you know, dragged the market up these past number of years, really putting in some stellar numbers, and it looks like it's right back on track. Now, of course, the Qs are up, what is this, 5 or 6 days in a row. So we got 5 or 6 days up. We are, you know, getting back over these prior highs. So once again, you know, if you're chasing here, you know, you might have a little bit of a tough time just because there could be some type of pullback or volatility or chop. But from a structural perspective, uptrends, new closing highs, that's not bearish behavior. So I think we can basically agree that this has been some real constructive action here, and it seems like the Nasdaq is kind of picking up some of the slack, while some of the you know, more cyclical areas, financials, energy stocks, industrials, take a little bit of a breather. So that's kind of what we're looking at here. You know, we don't usually look at the Dow, but if we look at the Dow here, you can see a little bit of reluctance to kind of break out. So again, if we look today here, and it's kind of this theme again of technology back to working and the more cyclical industrials maybe taking a breather, you can see DIA not quite breaking out today, not quite, you know, lifting out of this range. It's kind of failing here at the top end of the range. So once again, it doesn't have to be doomsday, doesn't have to be, you know, turn into a big bear event, but it could just mean that we fall back into the, you know, midpoint to lower end of this range and chop around for another couple of days or weeks. So that's really the market there. In a nutshell, pretty good price behavior, price action all around. Doesn't mean we can't see some type of short-term volatility. Speaking of volatility, let's just look right at the VIX here. It was green today, right? So while the Nasdaq was up almost 2% and the S&P was up over 1%, we did see the VIX up as well, about 1.36%. So we almost got down, or we tried to, you know, sort of get back into the teens for volatility, and it seems a little reluctant. So it seems like this market wants to stay into the 20s. It is closing, remember, as we mentioned in our last video, this is, you know, one of the, Friday was the lowest close for volatility for VIX since February. So that was pretty spectacular to see, just the big collapse in VIX from 40s down to 20 in you know, 1 month's time. And basically we're starting to see a little bit of a floor maybe here and around this 20 area. So something to pay attention to, again, with kind of the reaction we saw today. I wouldn't be surprised maybe for some short-term, shenanigans here in equity land, but overall, I think we still have a lot of healthy behavior taking place. So that rounds out vol and equities. Let's move on to some other markets here. If we look at TLT, let's go to a daily chart. TLT has been kind of all over the place the past month. It's been basically sideways. We know from the past several months it's been in a downtrend, but you can see it's back below its trend filter. It printed a buy signal on Monday, and it's back below it, and currently a transition mode once again. So TLT really still just a tough, interesting kind of trade going on here. The weekly chart's been in a sell signal since mid-October. So, if you were kind of following this, or if you're looking at the longer term trends, you may have been stepped aside here just for the past couple of months waiting for this to really sort of even out, so to speak. And the daily chart looks like it's trying to, but it's still struggling. A bit of a steep sell-off today, down 1.5%. If we go to commodities next, gold and silver. So two that I want to mention today, specifically because the weekly chart on these, gold has been in a sell signal now for 3 weeks. Silver's trying to put in a new fresh sell signal this week, and that's even despite or in the face of this 6% rally that we've seen this week. Most of those gains coming from today, of course. If we look at GLD here, it's up 2% today, up 6% for silver. So let's go talk about that. Let's look at the charts now for these two respectively. If we look at gold, there hasn't been kind of much to like recently. We essentially had been moving sideways to slightly lower here throughout the months of October, September, October. November, we got the breakdown. This is the day here where things got pretty ugly pretty quick for gold on the 23rd, so 2 days before Thanksgiving. We got that breakdown, and we got as low as yesterday's price of about 166, but we came back strong today, up 2%. So a big kind of gap, and has the sort of potential here to turn this, that's not what I wanted, turn this into maybe some type of little 2-bar island reversal, if you will, if you want to get technical here. That basically means we gapped down on this particular day here last Friday, and we traded, what we traded on Friday, traded what we traded yesterday, and now we gapped back up. And we left these two on an island. So we have sort of that little 2-bar island bottom there. It's going to be powerful patterns, can really sort of mark new trends. In fact, you don't have to look too far. If you look here at GLD just a few weeks ago, we had an island top, right? So this is a bearish event. It suggests that there's an urgency to sort of sell off, and we did, and that's exactly what happened. You got in 2 months, you lost 10% in gold, and now you're getting the opposite here. You're getting an island bottom. So again, I don't know. It doesn't have to move like this. We don't have to go up in a straight line. It's just it's a technical pattern, and it is what it is, and we'll continue to map and measure it. But this is at least a near-term constructive event, but look at all this overhead supply. So I wouldn't want to get too excited here for gold. It's just got more to prove in my eyes. And if this is going to be a bottom, then you're going to have plenty of chances to sort of get involved. There's lots of overhead supply here, so I'd want to be a little cautious still. But it was a very strong day. Silver, basically the same thing today. This was up 6% on the session. You can see coming much closer or much more in line with this trading range. Silver, to me, has just got a more optimistic sort of view to it. It didn't suffer really such a big breakdown. In fact, you could argue that it basically held the pivot low here from September. So from September the 24th, we got down to about $20.45, and we held that zone even on this week's action. So silver kind of shaping up and just holding up a little bit better. And again, we'll continue to watch this gap here and see if we can get more follow through into sort of the rest of this week. If we go to, let's see, what anything else I want to talk about here. Oil continues to work. No real other changes there. So let's just go right to some sectors. I mean, honestly, the only thing I wanted to really highlight was technology. So we already talked about the Qs. Qs are working. We look at XLK outright, which had been stagnant, had been kind of the underperformer for the month of November. This is starting to break out here. It's not quite at all-time highs, but it's doing, it's negating a lot of this other sort of pessimistic or more neutral price action, and it is breaking out. That's constructive. Semiconductors are just totally off to the races, making new all-time highs. So that is constructive. And then if we take a look at something like energy, which has just been ripping, we looked at some of those numbers on Friday, just how much ground this has covered in a straight line. This is starting to give some back here, which is, pretty expected behavior. Just again, kind of ordinary and what you would expect when stocks go up such a fast, such a great amount of return in such a small amount of time. So that's it. That's what I got here for this week. Oh, actually, Biotech was the last one. Biotech. So we talked about this again on Friday on how good this looked here. IBB was sort of our favorite looking sector that we highlighted here, and XBI itself broke out to basically new all-time highs. IBB looked a little more actionable here, emerging from this base. You can see that has continued higher. Not the prettiest candle today, but it has gotten follow through, and that looks, still like it's attempting to work here. So we'll see. It did fail, arguably failed today, holding new highs, right? So IBB got above the highs here from July, got above them, and then it rejected them. So, there's some near-term caution, but longer term, again, the trends are still, kind of supportive here until they're not. So that's it. That's what I got for the midweek video. Hopefully you guys are doing well out there, back from the holidays. What did I miss? What are you guys paying attention to? Is there something we didn't talk about or something you see that's important? Leave a comment below in this video. Love to read them. Love to see what you're looking at. And as always, thank you so much for tuning in. Every Tuesday we do videos like this, keep you up to date with what's going on here in the market. If you like them, you can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great rest of the day. We'll see you back here tomorrow for some swing trade ideas during the market session.